Good afternoon, everybody. Welcome to the TraderMerlin Show for your Thursday afternoon edition. We had a wild one out there in our markets today. We'll talk about that a little bit later on as we progress through today's program. Hello, Sid from Kansas. I see we have Atlanta in here as well. Tony and our regular crew. Welcome, everybody. Even our Raiders fans. That's right, Tom. We'll let Thomasina have her Raiders fan fun. Why would you put a team in Vegas? Who knows? We're going to switch themes a little bit. We've obviously been talking on yesterday's show, kind of going into the shorter term end of things. Today, we'll look at the longer term end of things. And since we're getting near the year end, we have a market that's down roughly 20%, maybe with our falls today. And thought maybe let's do a show talking about value investing, some of the longer term aspects. I try to bring Larry on once a month, but it really seems to be like once a quarter at this point because he's so damn busy. Our topic du jour is going to be value investing for the long haul with Dr. Larry Jacobson. Larry, welcome to the show, my friend. Oh, are you... hold on a second. This happens every now and again, and it absolutely drives me crazy. One sec. I need to readjust here because for some reason it decided not to get your audio going. Keep talking for me. No, I hear no audio. God, well, this is the third time this one's happened. Okay, we'll try it one more time, and we'll call that one. All right, try it again now. No, I cannot hear you at all. Beautiful part of doing this stuff. I will try this piece right here. How about that one? And we'll call it beta. And bear with me, everybody. Sorry for this one. Where's the Zoom link? Come on, TJ. Yeah, let's blame TJ for this one. All right, and now try, Larry.
Okay, did you cut the red wire or the green wire?
There we go. We got it. Apparently I didn't cut any wires. I've got Larry up here. I will be limping through today's show as I try to get all of the streams right. So here we go. All right, Larry. I can't switch to show both of us at the same time right now. I will get that here in just a second. But let's talk a little bit about the end of the year. Here we are seeing markets are down significantly. A lot of people are starting to get into that mindset of, you know what, I'm looking for value, right? We got a 20% discount. Are there things out there that are worth buying? Talk to us a little bit about value investing and how you approach it.
You know, it's interesting. I always look at, believe it or not, corrections, crashes as a big V. And what that means is a lot of times you see the markets going down, and I get it. Some people are not educated enough to catch it as it first starts to go down the hill. However, what's more important is the fact that if you happen to miss it, and maybe you're in cash, but you're not losing money, at some point it will bottom out. We're not trying to call bottoms, but what really I find that's helpful is if I can find some stocks that I really like that are doing really, really well. And it really comes from something that Warren Buffett said, whether he came up with it. Some people said Jesse Livermore came up with it. It's an old quote that says, be greedy when others are fearful, be fearful when others are greedy. So at that moment, when the markets start to bottom out, that's the time you should be looking for stocks that you would love to own. And we'll talk about another way of trading it if maybe you can't afford the stock, but it definitely helps to have a process to be able to identify them. And, you know, we were talking before the show about Lake Mead when it almost went Deadpool. Mm-hmm. And what was interesting was when the lake really receded, you started to see all this garbage at the bottom of the lake. And I look at certain companies out there that when the crash or correction comes, they deserve to be down there. They never really had anything sustainable to begin with. And as a result, you don't want to just buy stocks because they're cheap. You want to buy stocks because the company is strong, but the stock is somewhat broken or out of balance right now. So that's where I'm thinking we're getting into a good time right now to find some things. And as I said, I found one this week, and we'll give it away as a holiday gift to your listeners today.
There we go. So let me ask you in the process. So for me, it's, and I know you're an active trader as well, so it's kind of like foreshadowing here, but for me to find a trading opportunity, I real quickly can glance here. You got a price chart of, I don't know, we got XLY over here. I can look at XLY or X, whatever I want, and find different levels or zones that I'm interested in. And I can real quickly make a trade and literally make that analysis in 30 seconds and be ready to go. For you, when you're looking at value investing, Is there a specific watch list? Is there a specific criteria? I mean, how do you, because you've got thousands to choose from, that process takes way more time and effort for you to do a value investing analysis than it would for me to do a technical analysis piece. So I guess walk our listeners and viewers through, how do you find the things that you want to add to your portfolio?
Well, great question. And so what we started to do is there is actually, you can start with a regular scanner if you understand the criteria that you're looking for. And so if it's okay, I'm going to share something with everybody. Let me go ahead and just share my screen real quickly. All right. And let me just start by giving you an example here. And let me know when you can see my chart up here. And then I'll go from there. So this is a company we've liked for a while. When I say we, Merlin and I actually started doing this, my God, back in 2015. So we're going on 7 years that we've been kind of looking at value investing type of stocks.
To be fair, Larry's looking at it. I'm just supporting him in his decisions because fundamentals is almost beyond me. But it's all right. It's okay.
Well, this is an interesting one. And for example, when you look at a company like Arista Networks, which I've liked for a very long time, this has been in the portfolio for a while. We had this beautiful sell-off into 2022. And in the mid-year, we came down to an area which looked really, really good. So instead of just going ahead and buying it for short-term, which you can do, and I did do that in the second pass through here, this could have been an opportunity for some people to buy it. Now, first question, we're looking here in the last 6 months. And we know, I'm going to ask you, Merlin, what has the market been doing over the last 6 months? Going up or going down?
Down worse than Britney Spears' career.
Well, look at this chart. It's been nothing but going up, up, up. And so if I can share the results, and again, everything I'm sharing is for educational purposes only. So wound up buying to open the option instead. And the reason I decided to do the option was 100 shares right now is close to 10,000. So there are people out there who can use the strategy without having to be that invested if you can't comfortably cover the amount of money necessarily to buy 100 shares of stock. So in this case, notice that you could have bought one contract for $370. And it went up to the expiration, which was December 16th, last week, closed it at $570, made $200 a contract, and made 54% in 6 months. And so these are the kind of trades you're looking for that have the ability to buck the system, will do better over the longer term, and more importantly, are things that are capable of being scanned. So what I want to share here real quickly, because I think when I go through this, it'll explain this to a lot of people a little bit better. I just have to come in here and find what I'm looking for. You know, found like
you want me to sing U2 in the background? I still haven't found.
Here we go. So hopefully you can see what I just brought up here.
Yep.
And to give you an example, I'm not going to get deep into this, but notice that like a company like Microsoft, and this happens very often, a company's out there, and this blue line represents what's referred to as intrinsic value. If we were to sell off the company piece by piece and came up with a total valuation of what the company would be worth, divided that by every outstanding share, we can actually come up with what we would consider a sticker price or fair value, okay, to be able to trade this stock. Now, notice there are times this green line represents the actual price of the stock around that actual intrinsic value price. So we came up to the year 2000. You could see that we were very overvalued compared to what the stock should have been trading at. So price being pushed by people in the market with that continuous amount of greed got this up to $59 a share with a market price value of $600 billion. Now, if you look at the actual company's worth at this time, it's $200 billion. So that means it was 3 times what it should have been selling at. And then, of course, we saw the big crash in 2008. And this was the time we wanted to be buyers, not here. And so like we teach our students, if you're chasing price up, at some point, you're going to overpay for it and you're going to be sorry. Yet down here, and we got to 2009, notice that the actual stock's market price dropped from 600 billion down to 106 billion, yet the valuation for the company was $313 billion. So therefore, we were undervalued, and you could have bought this stock for $15 a share. Now, why don't people do this? And it's funny because I heard Warren Buffett recently interviewed, and somebody asked him two very basic questions, but I love Warren Buffett's answer. He said to him, Warren, what you're doing doesn't seem hard. So why isn't everybody doing what you're doing? And he simply smiled and said, nobody wants to get rich slowly. And so that was very fascinating because you think about it, everybody's in a casino mindset. We just came off of crypto. And therefore, what we're looking at here is a strong rally in price. And when we get back to here where the green and the blue lines meet, that's where, again, we're back at fair value. So imagine that you bought it down here, it came back up to here, and then you could decide to sell it or continue to own it until price eventually you decided was enough. Now, to give you an example here, okay, we don't know as of today's date, okay, what the price should be selling at. And most importantly, what is the company actually worth? And I see some people in the chat, it's not about net book value. Okay, that's not the valuation. Okay, there's a different way of valuating a company. So the first thing, if you want to look at whether you're going to overbuy or underbuy a stock, is you first have to know what the company's actually worth. And so as a result, you have three different outcomes when you buy that stock or how this company is going to look in the future based upon what it's done in its past. Now, this is where Warren Buffett would be, right? He's going to look at past performance. He doesn't want a company that's brand new. He wants a company that has pretty much been in business for a while, but continually growing its earnings over time, doing great work for its shareholders. And he buys so cheap that he doesn't have to worry about it. So will this stock intrinsic value or the company's intrinsic value go up strongly, more normal, or will it come down a little bit? And that's really the question about the future. And you have to be able to calculate out based on past performance what you think the future is going to look like. And so there are the two scenarios at time of entry. You're either going to go ahead and pay more for an overvalued stock, or you're going to look to basically come in and look at a scenario for an undervalued stock. And then what Warren Buffett learned to do is find stocks that are trading for 25 to 50% below its true intrinsic value. This is known as margin of safety. And so when I started to go out there, and you recall, it happened like 7 years ago, I got this phone call that somebody was teaching this. I got to learn through a mutual friend, and I could go learn all these little pieces that I wanted to get questions. So, you know, you and I are both very similar, Merlin. We're going to invest in ourselves, get on a plane, do what we got to do to find somebody who knows how to do things that we want to do. It's the greatest, what I call definition of working right. You're not going to work hard because that takes a lot of time. You don't want to work smart. Why do I want to reinvent something that somebody else has figured out? And so, yeah, I had to pay him to coach me. I had to buy a plane ticket. I had to pay for a hotel, and it was worth every penny of it. So that's, my friend, how we basically find stocks right now. And yes, there's this particular way to go ahead and find how to calculate this number. And yet a lot of people simply guess. And this is what's going to happen. Come the next crash, you're going to find that we're going to see things come down in price. But is it a value, or is it, like they say, a clunk? So what I always joke and say is, are you going to pick the curtain by staying in a stock, or you're going to go ahead and take a look, right, at figuring out whether or not just to take the envelope and moving on?
You know, in that picture, I was going to try to, I don't have it set up over here, but in looking at that, it reminds me of, let's see if I can bring it up over here on this chart. So I'm going to add in an indicator over here just real quickly, just for fun, which is one that you all know called a moving average. And looking at that chart, there is a similar, oh, great. Don't pay for a subscription. You don't get to add in on a moving average. Let's see, what period moving average do we have? Let's check this out real quick. Let's just put a, I don't know, I'm going to say a 200 period moving average, which is obviously very long term. In the analysis that Larry was looking at, essentially what you're doing is you're using intrinsic value as its quote unquote moving average. And, you know, we like to look at things as an investor. If it's way below its moving average, well, it's deemed to be in an oversold situation. You're buying at a discount compared to average historical prices. If it's above its moving average, like you see here on, when asked about snow, let's go look at Tesla just because that's in the news and we talked about it yesterday. look how high above the moving average Tesla got back here in 2001, right? The moving average was right around 239, and Tesla was trading at almost double that. So that's an overvalued situation. Now, the difference here, because obviously intrinsic value is not a moving average, it's looking at the intrinsic value of the company and saying people are anticipating where price is going to go based off of a lot of the fundamentals, and they're trading that share price. So in this example right now on Tesla, you have something that's extremely oversold based off its moving average, but maybe not necessarily its intrinsic value, right? We'd have to pull up the metric and graph that line out there. But just kind of showing the similarities between having a medium line here that you look for as a reference point and using that as your gauge for is it overbought or oversold. And then I do like that Warren Buffett gives you a 25 to 50% away from that intrinsic value as your buy point.
Yeah, and the big factor here is it's not using a moving average. I just want to be
Right,
clear.
it's not.
Somebody who came in, but you're right. It could act like a moving average, but then based upon where price is in relation, can you get it for 25 to 50% below that moving average line if we were going to equate it to something like that? And you're absolutely right, because there's a price, and again, you have to calculate it out, and there's different factors that help you make those decisions. So one of the ways you start off is scanning for those opportunities. Then you've got to take it through some analysis to see fundamentally, is this a good company to own? Do you want to own this company? Because in a typical value investing kind of setup, you got to be okay holding a company for at least 3 years. It doesn't just pop overnight, but at some point, the goal here is if we're looking at something down below, like in this scenario number B, imagine that you buy it down here and over time, price starts to rally back to its intrinsic value. So you've been able to make back some of the profit and actually gain where other people might be losing. The same thing could be said here, that if all of a sudden we bought very overvalued and then all of a sudden the market starts to correct, if you picked a stock that is already 25 to 50% below its true value, you're not going to get that same chaotic, what I call pullback that you do with other stocks. So most of the time, and this is why a Warren Buffett never sells, he bought it at a price that even if there's a market correction or crash, it's not going to go below what they basically have paid for that stock. And it's fascinating when we get to a little picture. I'm going to kind of share what Charlie Munger said. I know he's your favorite,
Okay,
Warren.
you know what? You're banned from the show. You can't talk about Charlie Munger on here. Come on.
No, but he actually says something very, very cool, which makes a lot of sense because people just think they're going to be able to hit home runs all the time. Not the case. But in fact, if you can find 3, 4 of them that do really, really well, it could really boost your portfolio. So I thought we'd start there. And again, that's how I kind of came up with the trade on ANET that I showed you earlier, ANET, was it came to a point where there was a good margin of safety at a location on the chart that I'd be interested in owning it. Okay. And we go forward. Okay. Now I'm going to share where you can get this information shortly. But what I want to do, and this is the holiday season, Merlin gives us a ho, 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 then I'll go ahead and share something new with everybody.
Oh, there's no hoes on this show, buddy.
Sorry, all.
Oh, wow. PG-13 there. PG-13. Okay.
So give me lead us in with a ho, 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 and I'm going to share a little holiday gift.
Great. With my horse-ass sore throat. Hoo, hoo, hoo.
All right. Thank you.
Yeah.
So here's the one I'm liking. And let's take a look at it. I'm going to bring my screen over here to show everybody. Let me know, Merlin, when you can see what's going on here.
I got you.
All right. The ticker symbol is NTES. So I'm going to share some information. This is not really how I calculate it, but some of you asked, well, how did this even get on my list? Well, number one, NetEase is a Chinese company, but they're in partnership with Activision as well as in Electronic Arts. So they have a pretty strong presence here in the States. It's traded on the US markets. And what it is a diverse company that deals with, we say here, 3 segments: online gaming services, Udeo, which is basically a technology, artificial intelligence technology in schools, and cloud music. So it has very innovative businesses as well as some other things that they do. And again, I'm not that kind of person that's going to shy away from Chinese stocks if I think they're well established and they've been around for a while. So what I'll take a look at is just what are people saying about it. And this is something that really caught my eye. Consistent profitability and relative undervaluation make NetEase attractive. Now, I'm not going to react just off a headline. I will go through my filter of things. But what I do like about the fact is that you can see here that the recent Q3 numbers are excellent. It's still very profitable despite the growth and slowdown of the economy. It did not drop after the announcement that it did not renew its IP license with Activision Blizzard. It expires in January, has a very sturdy financial moat. Now, let me explain what that means. That's what caught my eye. A sturdy financial moat, I want you to think like a castle, just like that word says, a moat, where it has such a competitive advantage right now that it's very difficult for other companies to compete in its space. So I love finding companies that have very strong competitive advantages because people aren't going to be able to go into their space and take away market share that easily. And so the Q3 revenue was 3.41 billion. All right, so think about that. They're in the billion column in terms of revenue right now. And the big year-to-date dip in the markets have helped push this even lower. So let's see where I'd go from just a headline or something that I read. And by the way, those of you who have been around for a while and know when Merlin and I started doing this in 2015, and it became kind of a joke, was NVIDIA, right? That was the first one you and I talked about. And the reason it got on my radar was because the chairman had said, we want to be the premier chip maker of driveless cars. Then Merlin calls me up and goes, do you know what you did? You bought the premier chip maker for mining Bitcoin, and they're the premier chip maker for all gaming right now. And so what was fascinating was this idea that if we can find stocks that are not trading where they should be right now, then this could be something that you can continue to hold indefinitely if you like the company. And so if you want to put that, I know, Merlin, you brought the chart up. You want to go back to 2015, you can put a little line there and you can see how this thing has, yes, imploded, it's pulled back, but it's not down there at that point. And it's even cheaper than what we paid for it because it had a 4-to-1 split. So that means right now, NVIDIA, where Merlin and I first started recommending it on Power Trading Radio, is down around $5 a share.
Split adjusted, by the way. Split adjusted.
What's that?
It's split adjusted.
Yeah, so let's just say at this point that for this stock to go down to $5 again, right? And you can see right now it's at 138. It's going to take a lot to drive that all the way back down. It's going to have to be something bad that happens when you put the chip in your computers. But right now, they have a very strong competitive advantage. They're a great company, and I like them. Now, what you're going to like, and Merlin, you've seen this from me before, and it looks just like NVIDIA and some of the other ones that we've enjoyed. Here are the financials. So
real quick, before you go to financials, to Lisa's questions, where does Larry get that info document about undervalued that he just showed us? Look, it's headline stuff. So he's looking at specific maybe articles or statements made about a company, and then if something catches his eye, he'll go in and look at the fundamentals himself. So I guess the filter here would be the industry talking about something, and just pieces, as you mentioned, Q3 numbers being excellent and profitable despite growth slowdown. Those are the ones that go, oh, let me check this one out. And then he'll dig into it, which he's going to show us right now, and then that becomes the determining factor. So it's kind of like if you look at my 10 laws, which I've read number 3 to you many times, which is ignore the news but listen to every word of it. Larry's out there looking at the news, seeing what headlines, what people are talking about, and if something catches his eye, then he takes his skill set, which is fundamental analysis, and says, let me apply that to this. I'll dig into it with all my knowledge and see if it lines up with what I'm looking for. But generally, it's headlines and reviews and reports that come out that are going to most likely it draws attention. That's my assessment, right?
Yeah, and also it's the scanner that I built. So we built a scanner that also will identify certain stocks that might be setting up for that particular situation. And then I go out and start looking at headlines. So we teach students how to do this. Now, with the financials, look at this, guys. So here is the balance sheet annually for the last 5 years, as well as quarterly. The top line are total assets. The bottom line are total liabilities. So as you can see here right now, this company has been growing its assets even through the pandemic, consistently year over year, quarter over quarter while keeping their liabilities small. And if you take a look here, and you can look at the year over year change, notice what I like seeing here is that they're all positive. And as a result, it makes me even more excited to want to get in and start analyzing this deeper.
I would add
So
one
this is
more thing here, Larry. Not only are you seeing that they're all positive, what you're seeing is very consistent market moves. And this does include the 2020 and 2021 drawdowns. Even on the balance sheet, you can see in 2022. What we saw with almost every other company is you had wild swings in 2020 in total assets, liabilities. Those things were flopping over the place. This is an interesting one because if I look at the left side, the balance sheet, I'm seeing those blue bars every time getting higher and higher and higher. That's assets, great. Liabilities is slowly increasing, and the same thing on the right hand side. So there's an air of predictability and consistency that you're looking for as well.
Absolutely. And it's great to see that this company knows how to manage its debt and still grow its assets. And so what I want to show people here, I also like to look at is the cash flow statement. Now, this is quarterly. So this is where we kind of see that little bit of a dive between 2021 here, but then it's starting to get bigger again. And this is obviously a little bit lower, but these are the numbers I'm looking at year over year. They grew their net income by over 100%. They've been growing cash from operations. And why I like the cash flow report, unlike the income statement, is the income statement can be played with. It can be basically manipulated through taxes and EBITDA and amortization. You can't fluff the cash flow statement. And look at their free cash flow, Merlin. It's up 140%. So this is a company that's got a lot of cash. They're looking to keep going. And on top of it, they pay a dividend. So if you hold this stock for a while, you're going to get dividends on top of the appreciation in price. So this is one of the reasons why it got on my radar. Now, there's a lot more to do to calculate what its intrinsic value is, but many of you are getting an opportunity at least to kind of see specifically what a good company looks like compared to, say, like a GE, which is a typical dog. Even though its prices have been going up, I wouldn't touch that one with a 10-foot pole, said the Grinch.
There's also so many different ways that people can look at this. So, for example, I see Ganesha saying, I look at, price per share, price per book, price per earnings. Is that a good starting point? Look, there's hundreds of different metrics that you can look at to help evaluate how a company is performing. And I guess it's kind of, how do you like to season your steak? It's going to be different for each individual person. I think to say that just using those three metrics, it might be a little bit limiting there. I like what Larry does in looking at cash flow, because to me, seeing that money coming in, if you're basing everything off of the share price, that will tell you if something might be relatively high or low based off of that metric. But that doesn't really help me, because a company that is very speculative and is doing something very brand new, a growth stock, is going to have a price to sales. They may have a very high price to sales number or something like that, because people are expecting 4 or 5 years down the road this company's going to be great. Whereas somebody like Ford's going to have a very, very low number like that because they're already established. So I wouldn't necessarily look at things like PE or price to sales or price to book and all that stuff. But that's just me.
Yeah, and just so you guys know, I'm looking at the chat. Larry's not going to get to it in this session. Larry's going to talk about it to tell you where you can go get information on it. But what I'm trying to share with everybody is, in this time when most people are nervous, they're freaking out, they're seeing prices going lower and lower, there's going to be these diamonds in the rough. And if you can identify them and you're willing to take a chance on them, then once I determine what the price is that I'm interested in buying at, and then it lines up beautifully here, say, with a chart. Look at this. We came back to retest zones that haven't been tested since the pandemic. Right. So there's an opportunity here to basically be able to go in, find something that might look really, really good, and then have the potential to see if this thing's going to run up for a while. So where this differentiates from, say, what Merlin likes to do, and we talked about this many times, you and I, yeah, I'm also an active trader, but these are the things that I basically put away for a while. And the nice thing about it is I could buy the stock, and right now the stock's around $5,300, for 100 shares, compared to when it was up here at $14,000.
$1,400.
So this might be an opportunity to be able to come in right now and see if this works. Now, again, it's not only the decision I'm making here. This is great if I'm just doing more of a active type trading and I want to hold it and see a nice rally, which we've had over the last couple of months. But also, is this something that you want to own for the long term? You got to be willing to do that for at least 3 years. And two, do you want to buy it at a price you're comfortable owning it at? So this is going to be where I'm going to show you, and I see a lot of chat below about where to get this information, and I love it. Well, about, God, it's going almost a year ago. I don't know, how many of you know Bashir Chaya? Anybody here in the room have the opportunity to get to either trade along with Bashir Chaya in one of our sessions or had a class at Bashir? Bashir is an awesome trader. And Bashir and I were talking one day, and he said, you know, I'm studying to become a financial advisor. And I said, ooh, okay, Darth Vader. But no, he's going to be great at it. He's so ethical. And one of the things we started talking about was we both had this appreciation for value investing. And so he came over and said, hey, I'd love you to take a look at this. And I looked at some of the things and I said, well, if you include some of this here, I think this could be an amazing product. And so what we came up with, and just to show everybody, there's now a focus course, and some of you may know what focus is, maybe some of you don't. And with the focus course, it basically is a one-day course. Then Bashir will take you through how to analyze for intrinsic value, how to scan, how to look at a chart, okay? And his next class is coming up on February 9th. But here's the nice thing. If you basically get the class now, you can go back and watch the recording from his last class. And every 2 weeks, he holds what are called application sessions, where he comes in to answer students' questions, look at charts with them, maybe give you some information. I don't know how many of you have actually taken this class, or is anybody, I'm just curious, taken this class with him. But it's an amazing class to understand how to go about identifying stocks just like NTES. And so I'll show you in a minute where you can go to get more information about it. But one of the things I'm going to bring up here, and this is something Merlin and I look at every single week. He knows on Friday he's going to have this in his inbox for educational purposes.
Show the spreadsheet.
Here it is, guys. So this is every trade that we've looked at going back to the very first one in 2015. So the nice thing about it is it doesn't have to be a large portfolio of things. In fact, when you think about 2,000 stocks, there's a lot of them that basically are not doing as great. But down here, you can see that we had a 10-for-1 split on TTD back in 2021. NVIDIA also had a 4-to-1 split. ANET, I was just talking about, had a 4-to-1 split. Shopify split 10-for-1 back here. So when you build in the split prices just on these right now, notice TTD, Merlin and I were talking about this, suggesting us. We don't recommend anything, but we're sharing why we liked it. And now the price is at $5.50. We also were looking at NVIDIA, which is now adjusted split $7.84. ANET is adjusted split $64. And Shopify is I already said $5.33, and I think I've covered them all. So imagine that you bought this stock, and that meant it was around $50 a share. And you saw how some of these technology stocks took off. What I do want to point out is we have a lot of triple-digit winners here. And notice that the longer it goes out, more than 2 or 3 years, is where we start to see the double into triple. Now, there are losses. I'm going to be honest here and say some of them didn't work out or in the process of seeing what's going to happen. But then, Merlin, I heard Charlie Munger say something. And I know you don't love the way he talks about crypto, but what he said here was pretty humbling, and I think you'll like it. He said, you know, Warren Buffett and I are not that smart. We just had some really good trades. And if you took those trades out, we probably would have done average. Yep. So think about that. If you took out NVIDIA and Activision and Shopify and Merlin's favorite Live Nation and Melly and TTD and Solar Edge. And remember, Merlin, you know why we looked at Solar Edge. Yep. It was because of the election that was coming up, and the current president was very big on green energy. Yep. So this one we looked at was $84, which is now $311. And these are the actual prices as of today. So when we look at a portfolio going back to 2015, and on average, and again, this is not touting, we're not bragging about anything, we're showing this for educational purposes only. But if you had simply bought 100 shares of each of these stocks, right now you'd have a winning percentage of 63%, and you'd be up 68% in the portfolio. So you can see what the actual portfolio's done. And right now it'd be about $335, which is now slightly over $500,000. So here we have a market that since January has been going lower and lower. And notice that we have continued to preserve these larger winners. And that's what Warren Buffett learned. That's what a lot of value investors that know what they're doing is learning. And that's what Bashir's class teaches people how to do, how to find the NVIDIAs. I saw someone in the chat say that. Well, you're going to tell us how we're going to go ahead and see this. And if you look at it, right now, there's some names, household names that some of you might see, but look how many months ago it was that they actually look like they triggered. And so this one has only been in play for 2 days, and it's already up 5%.
Funny,
how many stocks?
You've got Amazon on there. We were just talking about Amazon on the show the other day. I'm looking at it potentially as a great value play as well for my portfolio.
Absolutely. And by the way, do you know in 2009 Amazon was trading at $70 a share? So you're going to have people out there going, "Oh, there's no way it's ever going to 10 bag again." Really? How does anyone know that? Right? The same people were saying that in 2000. And it said Amazon would never make it, right? This is never going to happen. Who'd want to buy books online? And then I heard something stupid yesterday because Barnes & Noble is opening 30 more stores, a whole 30. That must mean that Barnes & Noble's back in the game taking market share from Amazon. Okay.
Yeah.
So I just wanted to show you guys this because, again, it's for educational purposes. Neither one of us are saying that we've taken the trades or not taken them. We're just showing this to you guys to see how value investing works. And some of these trades we've been in tracking now for going on, wow, look at this, Merlin. We're going to be in there going on 6 years.
Yeah, the only thing I'm holding that long is crypto myself. You mentioned you had a screener. Talk about something. You had a screener for this stuff.
We do. And so part of the class, you'll be introduced to a screener that I worked on with Bashir. Added a couple things here and there. So the first phase, it goes in phases. First phase, you're going to learn how to screen for the opportunities. Then you're going to learn how to use the news to determine whether or not it's something you might be interested. Because again, you want to buy a good company. You want to own that company. You want to be an owner of this company. And therefore, if you're not interested in owning it, don't trade this strategy. From there, you go into learning how to calculate future intrinsic value. What should this stock be worth today if we discounted it into the future? And then does it have a margin of safety, which will allow us today to buy a stock that may be worth, I'm making this up, right? Like I'll use NVIDIA as an example. When we looked at NVIDIA back in November of 2015, the stock's intrinsic value was at 100. We were buying it or looking at it here at $33 to $39 a share. So that meant it had a 60% margin of safety. And so the reason why we track the splits and everything is that we can continue to see that, yes, remember the actuals will go down too, but look at some of these percentages. So by far, Merlin, I would say that Shopify, Trade Desk, and I love it because Merlin kept looking at me years ago. What are you going to do with this Trade Desk? It doesn't move. It stays at 50. It stays at 50. And then bam. It popped.
Yeah.
So what I want to share with everybody, if I could, Merlin, is where to find more information. I know some of you are asking about it. So I'll put this here in the chat.
I don't think you can.
Okay. So if you want to maybe, I don't know if you can, Merlin, and want to type it in, but there it is, www.otacourses.com. And when you first come to this homepage, you come to the menu here. There's a little drop down that says Focus Courses. When you click on it, it will take you to all the various focus courses. So here's value investing, the one I'm talking about. Thank you, Merlin.
Yeah.
And when you click here, it actually will bring you down to a little video that Bashir did. So he talks a little about what this class is about. It also gives you an overview about the class, what it's going to cover. And some of you right now, and the way I look at this is I look at that V of markets. When this market crashes, and we don't know how much lower it's going to go, could go much lower, but I want to be there and ready to pick up the good companies when that happens. And imagine if you're in a stock that is a great company, but the stock is very undervalued at this point, this might turn into an opportunity. And so I recommend or encourage all of you to come in, take a look at this. Another one that I teach, in case any of you are interested, and I know Les is in here, and Les, if you want to chime into the chat, you're very vocal in this group. I teach a weekly options class, and I get in a room with everybody every Saturday morning, and we go over setups, and it's a very conservative strategy. It basically looks to make 5% a week, very, very little risk. There is always chances of not making money, so there are very good rules here. And so I don't know if anybody else is in that class, if you want to chime in, but I have a great time going over this with people. And there's some of you that just want to add more tools to your tool belt. And these are more of the advanced strategies that a lot of people hear about, and different instructors are teaching them. In fact, Sean Reed is coming in next week for the very first time to teach a new class about trading options with volatility. So he's looking at it from the premium approach, where I look at my class from price and time decay. So a lot of different ways to go in here, okay, and learn how to maybe create a bigger girth of opportunity for your trading. And so, yeah, for my long term, I love looking either to trade the stocks in value investing, or you can go out and trade a leap. And in the options world, I could go out 2.5 years from now, buy an option that will be much cheaper than the stock, and just sit back and let it do its thing. In this case, I decided just to do a 6-month on ANET and got out, when the expiration expired.
Nice. Good stuff. You can, let's unshare your screen. Let's get your beautiful, freshly shaved face back on camera here. As we wrap up 2022, what are some things, because we have a few more minutes here, I was going to say, what are some of the kind of simple things that you do, or is maybe like a routine for the year-end kind of wrap-up? Do you do any self-reflection? You do any account analysis? What sort of things can you say maybe will help people in their advancements of their trading and learning by doing something at the year-end?
Great question. So every year, believe it or not, I go back and read Think and Grow Rich. I do it religiously every year because for some reason, I always get something new every time I read it. And I really enjoy that book. But, it's interesting. I know you're talking about it. I'm going to do it. I'm actually looking to write a book this year. And the book is going to be about lessons learned over the last 10 years since the last crash of how to think more successfully in life, which includes investing and finances. And it really is pretty simple. The problem is most people never learn it, and as a result, never really put things into practice. So when I started to read Think and Grow Rich, and what I liked about the book, great book for those people from a psychological standpoint, but what about putting things into action? Can we actually do that in a way? So that's one thing I do. Another thing I'll do is I'll sit back and I'll review my trades for the year. I always go back to my trade plan. In fact, next week on Wednesday, the 28th, I'm going to be teaching another online trade plan class. And one of the things that I've included in the new class is what's called a goals calculator. So for the very first time, I'm teaching students how to properly set goals using a trade plan to meet their risk, to meet what they're going to tie up in buying power per trade, and most importantly, what they need. And the reason I came up with this was if we don't have a plan and we're just trading to trade, then you're going to turn this into a 401k at some point. You're not going to make what you think you need. Yes, you could have some success, but what it really does is help you to go ahead and really take control of your trading. And so in 2023 especially, I have really started to put a couple of new strategies that I've been studying, and I'm very methodical like you are, Merlin, and I will put 6 months into a new strategy and won't actually go live until I can consistently replicate it. And I learned that when I was going for my doctorate, doing a dissertation, that the two biggest things about a study, believe it or not, are validity and reliability. So is this a valid strategy? And is it reliable that any other person that were to trade this strategy could follow these steps and potentially use this to make their own goals come to life? Nice. And that's where trading weekly options kind of came from, was that first attempt to come up with a course that really was designed to help students in a less spastic or chaotic way feel comfortable putting on a trade for 5 days or less, knowing they have a goal they're shooting for every week, and being able to attain it without having to stress out at time of expiration.
Good stuff. Well, thank you, Larry, for coming on today, talking about value investing, sharing ANET, and rubbing Live Nation in my face yet again. So I'm glad you didn't run, what was it, Skyworks in my nose and Skyworks again.
That's a great way.
No, no Skyworks.
Just so we're taking a look at
my
Skyworks. Yeah, not bad. It's only up 14%. Not bad.
Okay, good. For those of you who may not know why I have such a problem with Skyworks, I sold it when it was like $4 a share. I had thousands of shares of it, sold it so I could buy a house, and if I just kept it, I probably could have bought 4 or 5 houses with it. But anyway, there you go.
Lori asked, what's my doctoral degree in? Organizational leadership. So that's kind of why I'm a very strong process guy. I just like putting processes together.
Let's not forget the masters in jazz.
That is true.
One day we're going to get Larry to play some music on the program. All right, Larry. Well, thank you so much. Hope you have a fantastic holiday with your loved ones, and look forward to having you back on again soon.
Thanks, Merlin. And everybody have a wonderful holiday. Happy New Year. So great to be here with you guys. Trade safe. We love you and hope to see you in a class soon.
Good. Take care.
Thanks, Merlin.
Guys, Dr. Larry Jacobson talking about value investing, looking at some of the fundamental side of things. And again, for me, it was a tough one because I studied fundamental analysis and I always had issues with it. It was just like so many different factors. And as was brought up here, there was a lot of comments that came through. But there was one in particular that I wanted to mention, which it's tough for me to scroll back through here. Saying like, look, you can do all this great fundamental analysis, but you just never know. Oh, maybe it was Indigo Clover says, but you could have real issues like CEO being distracted or order backlogs drying up, or you could have anything happen. And that's just a risk you have to take from a fundamental investment perspective is I know I'm going to hold this for the long haul. That's why you look for a company with good leadership and hopefully doesn't have any issues. But, then you get a company like FTX and the whole thing was a big house of cards. So there's always going to be that risk factor to holding a long-term investment, and anything can happen out there as we've seen multiple times. So again, Larry Jacobson from Online Trading Academy. You guys can click the link that I put up there in chat, which is otacourses.com, to find out more information on any of those. Real quick, let me just go and show you. It was kind of a surprise to me today. I actually thought we were going to have some follow-through. I thought we'd have a better than expected GDP, and I thought the markets would rally because of that. I was totally right on the better than expected GDP, and I could not have been more wrong on the direction of the market. Here is your economic calendar for today. Check out that GDP number. We were expecting 2.9, and as I was saying, we already beat on the advance. We already beat on the preliminary. Why wouldn't we beat on the final? And we did by a good margin. It was expecting 2.9. Came out at 3.2 for that final GDP. And then we go over here, look at our markets. Just take a peek at that NASDAQ, which at one point was down almost 4% today. Holy cow. I'm glad I'm not in anything right now because I would just have to have a neck brace on for that kind of whiplash. But just huge aggressive down move, ripping right down towards this. I guess I could probably stretch out this little area of demand that I've drawn. Let's just bring it all the way over to there. Actually hit right on it. Interestingly enough, going back to this demand zone that was formed back in November 9th and 10th, we tailed into that today and then ripped up out of that one. The other piece that I thought was maybe noteworthy, we talked about Nike. It's saying, hey, great shorting opportunity for today, potential. It did not happen, right? Why? Well, because remember, we had to open up above this the low of that candle, and we did not. It actually gapped down and then rallied up a little bit later on. But yeah, really interesting seeing how this market had such a very negative reaction to a positive GDP. For me, stepping back and look at the big picture, a positive GDP like this does a couple things. Number one, it squashes those fears of stagflation. Remember, stagflation is going to be significantly rising unemployment, really high inflation, and declining GDP. Well, unemployment is increasing, but very, very slowly, so that's okay. Inflation was staggeringly high, and it's slowing down. GDP, we did have 2 consecutive quarters of negative GDP growth, but now all of a sudden, we're back into positive territory. So it kind of is squashing a little bit of that stagflation fear and maybe putting a little bit of pressure on the Fed to back off a little bit more. Now, of course, what's more important, GDP or inflation? inflation is clearly the more important one. So it was interesting seeing the negative reaction there. Market sold off pretty much most of the session until right near the very end when it started to bounce back up. But it was caught me off guard. Glad I wasn't really that active in it today. So there you go. It's ready for long until, yeah, exactly. There you go. I don't own Tesla yet. That's right, Big F. I don't own Tesla yet. I might soon. Holy cow. Let's take a peek at that Tesla chart. It's funny. I would really like to ask, look what's happened in the after hours, though. Nice spike up in the after hours. We were down another 8% today. We almost got down to my strike price. We hit low of 122 today. I have the 120 puts, which I've sold those. Fine collecting my premium, and if I own it at that price, I'll be fine with that. But at some point, Tesla is going to have a capitulation moment. If we look at the volume here today, we may be there. I mean, look at the volume today. You guys can see we had this, unfortunately it's on the same window. You can see you had a huge spike in volume, way more than normal average. Average normal volume is going to be right in here somewhere. Let's call it right around, I don't know. I have to put a moving average on that one. But it looks to me like we're trading on average right around 100 million a day, and we're over 200 million today. So that may be a climactic moment. We'll have to wait and see. Again, I feel like there's a lot of pressure to keep the price of Tesla above that 112.50. But hey, I'm going to own it. If I'm going to own it, I'm fine owning it at 120, and we will have to wait. As Tom said, GDP indicates the economy is fixing itself. Not good for the Fed, who is hoping to take credit for fixing the economy. Yes, exactly. Well, I just thought it might paint a picture that the Fed's going to back away and be like, hey, you know what? We didn't need to raise rates as aggressive, but I guess not. And who knows what tomorrow is going to hold. By the way, tomorrow, guys, we do have the beginning of the Santa Claus rally. Given how bad my throat and my sinuses are, as you can probably tell, I will not be doing any more ho-ho-hoing on the program. But here is what we have for tomorrow's session. And I didn't even change my dates. That is the final. I could have sworn I put it in there. One sec. Let me real quickly make sure I have the right calendar here. Yes, I just forgot to go forward one slide. There is your calendar for two. So there's the 23rd. And as you can see, there's actually quite a few announcements happening for the U.S. We have core PCE price index coming out tomorrow, durable goods orders. Very interested to see what happens with this core PCE. Remember, that's the big one that the Fed is watching out for. So it'll be very, 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 very interesting. You have durable goods orders, personal income, personal spending, new home sales, as well as the UOM consumer sentiment number. So a lot of important data coming out tomorrow. And given how bad the existing home sales numbers were, very curious to see how bad the new home sales are going to be. You can see right now the expectations are they're going to be significantly lower than they were in the previous month. Yet, I'm looking at some of the home builder stocks. They're rallying. Here's Toll Brothers, right? So Toll Brothers has been on a very nice rally. It was down at $39 back in October. Hit a highs recently of about 52. Here's Lennar, also been a nice rally. Here's KB Homes. Right, so they're looking pretty good, even in face of anticipating much worse new home sales going forward. So that's going to do it for me. I'm going to wrap it up. My throat is killing me, and I'm about to start coughing again. Elon Musk announced he's stepping down his Twitter. Yeah, he's waiting until he finds his replacement, right? Did he officially find somebody? It was funny. He says, if I can find someone who is a sucker to take over this company or something like that. It was pretty funny. But I actually thought him stepping down as Twitter CEO might actually be good for Tesla, so he can get back in more of an active role there, but who knows. Okay, I'm trying to catch my breath over here and not cough in your ear. Hopefully you guys enjoyed that session with Larry, learned a little bit about value investing and some things you might be looking for the long-term portfolio. Tomorrow is Friday. I will be doing a show. I'm doing a show tomorrow. I think I'm doing a show tomorrow. Yeah, I'll do a show tomorrow. So I'll be doing a show tomorrow. Not sure what we're going to talk about, but if you guys have a specific topic you want us to discuss, you can send it on in under any YouTube video. Just comment under any of the TraderMerlin YouTube videos, and I will hopefully incorporate that into tomorrow's show. Or you can email me at tradermerlin@gmail.com. Until then, happy trading, everybody. I will see you all tomorrow. Take care.